Okay, let's take a good look at this. We are going a bit impulsive into the Euro New Zealand dollar, and it is quite surprising. This is the 4 hours on the Euro New Zealand dollar, and right now what I'm looking at is a possible QMR or QMC trading strategy. Again, let's draw the whole thing. We're going to start by looking at this entire pattern right here. We have this high leading to this low, takes out this low, makes this high, comes back, makes the high, and now we've seen price come down here. Now, why do I say QMR or QMC? I'm going to put this all clear for you guys. We all know the QMR or QMC is for the bearish one, right? For the bearish one, we have price does this, and then when price comes back and takes out this liquidity, we expect it to bounce off again, right? So this is just a test trade basically. What do I see here? Let's start with the first high. This was the high, and price took it out. Immediately price took it out, price ran for the low and took out the low. Then price made a low. This should be structural liquidity if price takes out this high, and what the price did, price took out this high. So we have the same pattern right here, and we can see price finally taking out the structural liquidity. Now looking into the break of the structural liquidity, let's take a good look at the pattern coming up inside that place without looking into lower time frame, right? We could go into lower time frame and look at this, but I'm going to just do this on the higher time frame here. We have this high leading to this low, which led to this high, which is taking out this high, this low, sorry, took out this high, and now we've had this high. Now we're going to have some sort of retest, and price should bounce off, probably come back here before going off, or it could just you know, shoot off here, one of the two. So if you go down to the lower time frame to look at what I just drew, you can see it right there. This is what price is doing. Comes down, went up, went down again, took out this low, and is returning for liquidity, and is supposed to move away. It is supposed to. Now I haven't explained this from the supply and demand angle, so let's look at the supply and demand angle real quick. On the 4 hours, let's look at it. We can see that in this whole area here, allow me remove all of these drawings. Now allow me remove all of this drawing. Let's go. So you can see right here, all over this spot, I can find a good demand zone, a good supply zone here. But here there is a demand zone, so we're going to call this demand zone out. Something you quickly notice is this demand zone was almost utilized. Was it even utilized actually? Let's see. It was utilized immediately, very tiny touch, but price went higher because there was no zone here. It went higher and went above, then it immediately rejected. Now on rejection, it created a supply zone right here. Now this supply zone it created, it moved, created a bump, made another supply zone. Matter of fact, sorry, this is it, made a supply zone here, and then price pushed down, breaking through the original demand zone it had, right? It broke through the demand zone. Now after breaking this demand zone, it came back to retest the supply. We got the supply, broke out of it again, creating a good zone right here. This is a good supply zone right here. Now you can see this has been utilized, so we can remove this. Now the strategy expects this to be taken. When this is taken, price is going to come in here and move away. So price took out this low, this high, sorry, this supply zone, right? Took out the supply zone. You can see how it went in, rejected a little bit. You can see that very small rejection right here, rejected a little bit, then slowly danced into it, and now it created a new one. Okay, what do we see within this zone? Now we'll go into the 1 hour and see. Remember, price is mitigating the lowest demand zone below, and you can see what price did. Price went in there, didn't find a straight way at first, came out, went back in and started to push out of it again. And in this process, it's cleared out this area and also cleared out this good demand zone. Cleared out this demand zone, and now it's moving downward. So we're looking at price and we're saying, okay, technically we expect price based on QMR or QMC, right? We expect price to do what? Push off from whatever demand supply zone it finds here and push off away from it, at least, you know, a little bit high. And that is what I am trading. So this is New Zealand, this is the euro against the New Zealand dollar, and I hope you picked up a little bit of something to trade with today. Thank you all for watching, and catch you all on the next one. Peace.